Here's a summary of the HIMS and HIMS 2025 Q4 earnings call, focusing on key financial metrics, management commentary, and future outlook. HIMS and HIMS 2025 Q4 earnings call summary introduction and CEO's vision. Andrew Dudum, co-founder and CEO of HIMS and HIMS, opened the call by reiterating the company's core belief in making high-quality, personalized healthcare accessible to everyone. He highlighted the transformative impact of their platform, which has surpassed $1 billion in revenue and achieved profitability by scaling offerings in sexual health and dermatology, enabling investment in new growth areas like GLP-1s. He emphasized that GLP-1s, while a significant accelerator, are just one part of a broader, more diverse global consumer health platform. The company now serves over 2.5 million subscribers, fostering deeper, longer-term customer relationships through an expanding set of offerings. Dudum stressed the rapid pace of innovation, with new specialties like labs, hormone therapies, low testosterone, menopause, perimenopause, launching efficiently and showing strong early customer adoption and treatment success. The company is also aggressively pursuing international expansion, with recent acquisitions and a significant agreement to acquire Eucalyptus, aiming for over $1 billion in international revenue within 3 years. He outlined 3 key investment pillars for the future of healthcare: innovation in diagnostics and devices, the integration of AI for precision treatments, and the development of scalable infrastructure for personalized treatments. Dudum reaffirmed their 2030 revenue target of $6.5 billion and adjusted EBITDA of $1.3 billion, underscoring their commitment to a consumer-centric healthcare model. Key financial metrics and CFO's commentary. Yemi Okupe, CFO of HIMS and HIMS, detailed the financial performance and provided an outlook for 2026. Revenue. Q4 2025. $618 million, a 28% year-over-year increase. Full year 2025. $2.35 billion, a 59% year-over-year increase. 2026 outlook, excluding Eucalyptus Q1. $600 million to $625 million, 2% to 7% year-over-year growth. Full year, $2.7 billion to $2.9 billion, 15% to 24% year-over-year growth. International revenue is expected to contribute at least $200 million in 2026, with Eucalyptus adding another $200 million in the second half if the acquisition closes. Profitability. Adjusted EBITDA, full year 2025 $318 million, an 80% year-over-year increase, with margins expanding to 14%. Adjusted EBITDA, Q4 2025 $66 million, with a margin of 11%. 2026 outlook, excluding Eucalyptus Q1. $35 million to $55 million, 7% margin at midpoint. Full year, $300 million to $375 million, 12% margin at midpoint. Net income, full year 2025 increased to $128 million. Gross margin, Q4 2025, 72%, a 2-point decline quarter-over-quarter, impacted by international market growth, new specialty launch expenses, and shorter shipping cadences and weight loss. Marketing efficiency. Marketing as a percentage of revenue improved to 39% in Q4 and FY 2025, a 7-point year-over-year improvement, driven by increased brand awareness and retention gains. Operating expenses, G&A, increased 2 points in Q4 due to international headcount and new leadership hires, but flat year-over-year for the full year. Technology and development increased to 7% of revenue due to investments in engineering and AI talent. Cash flow and balance sheet. Operating cash flow, 2025 $300 million. Free cash flow, 2025 $57 million. Cash and investments, end of 2025 $929 million. Significant capital allocation included over $225 million in CapEx for facility expansion and capabilities, and over $330 million deployed for acquisitions. Share repurchases of approximately $90 million in 2025. Key highlights: subscriber growth, reached over 2.5 million subscribers by the end of 2025. Approximately 65% of subscribers utilize a personalized treatment. Personalized solutions, differentiated treatments, simplified regimens, alternative form factors, and data-driven insights are driving higher retention and customer lifetime value. HIMS brand growth, over 30% year-over-year revenue growth in 2025, transitioning away from generic on-demand sexual solutions to combination treatments. HERS brand growth, triple-digit revenue growth, accounting for nearly 40% of U.S. revenue, driven by expanded offerings in weight loss, dermatology, menopause support, and diagnostics. International expansion, significant growth with acquisitions of Zava and LiveWell, and the agreement to acquire Eucalyptus, with an ambition for over $1 billion in international revenue within 3 years. New offerings, rapid launch of labs, hormone therapies, low-T, menopause, perimenopause, showing strong early customer success and eligibility for treatment plans. Technology investments, focus on diagnostics, devices, AI for precision treatments, and a scalable infrastructure for personalized care. Weight loss, demand remains strong, with subscriber growth over 70% year-over-year in Q4. Average weight loss reported by consumers is significant, 22 to 29 pounds in the first year. Eucalyptus acquisition, a strategic move to strengthen international presence, with an annual revenue run rate of over $450 million. International business expected to break even within 12 to 18 months post-acquisition. Lowlights/challenges. Gross margin pressure. Q4 gross margin saw a slight decline due to international market growth, new specialty launch expenses, and shipping cadence changes in weight loss. 2026 Q1 guidance. Revenue growth is impacted by a $65 million headwind from changes in weight loss shipping cadences, 503A, fulfillment, and EBITDA will see pressure from the Super Bowl commercial investment. International profitability. International markets are expected to operate at or near break-even initially, with a focus on growth before margin expansion. Compounded GLP-1 dynamics. While the majority of revenue is non-GLP-1, the shift in fulfillment for weight loss treatments, affecting revenue recognition timing, and potential regulatory scrutiny create a headwind for this specific segment. Management's forecast/outlook for future quarters. 2026 outlook, excluding Eucalyptus revenue, $2.7 billion to $2.9 billion. Adjusted EBITDA, $300 million to $375 million. Q1 2026. Revenue, $600 million to $625 million. Adjusted EBITDA, $35 million to $55 million. International growth. Expects international revenue to become a more meaningful portion of overall revenue. New offering scaling. Expects newer offerings like low testosterone, menopausal support, and labs to scale incrementally throughout 2026. Eucalyptus integration. Anticipates closing the acquisition in the second half of 2026, contributing at least $200 million in second half revenue. Significant risk factors. Regulatory and legal scrutiny. Potential for regulatory changes or bans on compounded GLP-1s. Competition. Increasing competition in various health specialties. International integration. Successfully integrating acquired companies and scaling operations in new markets. Execution risk: the ability to effectively launch and scale new offerings and technologies. Customer acquisition costs, CAC, and lifetime value, LTV, maintaining efficient acquisition and maximizing customer retention. Dependency on key offerings. While diversifying, a significant shift in demand or regulation for a major offering could impact results. Most important statements from CEO and CFO. CEO, Andrew Dudum: by continuing to put the customer at the center of everything we do, we are changing that access to high-quality care. Our platform puts us at the forefront of that change. And we believe that with deliberate investment and execution, we will have the teams in place to drive category leadership in each of these markets, positioning our international business to scale to more than $1 billion in annual revenue within the next 3 years. CFO Yemi Oku: subscribers on our platform grew to over 2.5 million in 2025 as we continue to execute on our mission of helping the world feel great through the power of better health. And our 2026 outlook anticipates revenue of between $2.7 billion to $2.9 billion, representing a year-over-year increase of 15% to 24%. This summary provides a detailed overview of HIMS and HER's 2025 Q4 performance, strategic direction, and future outlook.